My name is Deepak and I'm going to be your host for today's tax segment of our show. How should you deal with US taxes if you were going to India for any kind of assignment? It's a sensitive question, but it's a question that must be answered. And to answer this question, we have a special guest with us, a famous certified public accountant from Fremont, Sanjeev Gupta. Sanjeev ji, welcome to our show.
Thank you, Deepak ji, for providing an opportunity to come to the show and discuss this vital topic. As you know, a lot of people are getting assignments in India. They're going in different aspects, maybe as a salaried employee, maybe as a contractor, and trying to understand the implications of taxes there as well as filing the returns in US. So I want to go topic by topic. So let's take the first topic, salary. If a person goes to India as a salaried employee, there's a need to file the tax return in India showing the Form 16 and other deductions that he can claim on the Indian taxes. But being a green card holder and citizen of US, there's a need to disclose that Form 16 on the US tax return. Now the things comes here is he will be getting a lot of benefits, lot of deductions on the Indian taxes, but those things will not apply to US taxes. But what happens in the US tax return is he will get benefit of $96,000 for foreign tax earned income exclusions. To get that exclusion, you need to file the Form 2555 with the US tax return. Form 255 is a little complicated, but definitely he needs to file that return. He needs to contact some professionals, like he can get our help. We can definitely help in that area. So salary is one area. If he goes to India as a contractor, same thing applies. He needs to file the tax return in India showing that income, as well as he has to file the same tax return in US. Again, in India, he can claim a lot of deductions, exemptions and everything, but that may or may not be allowed in US. But he will get the same credit for foreign earned income exclusion or foreign housing as allowance exclusion, whatever is applicable, up to $96,000. This is increasing every year. Now I think it's increasing by $2,000 every year. So right now it's $96,000. It may go up to $98,000 next year. But he has to show that he has to file the tax return in India in US showing that income, plus he has to show any other income he is getting in US, like interest income or any other income, rental income in US, and he has to get the credit on the Form 2555. That way he will not be taxed double. Now if he has paid any taxes in India if he has paid any tax in India on the income that he earned in India, he can get a credit. But as I said, if he gets a foreign tax credit up to $96,000, not foreign tax, foreign earned income exclusion up to $96,000, he will not get credit on that $96,000, but he will get credit on the amount above $96,000. So that way he can get exclusion, and he can get a credit about that $96,000 if he has paid any tax in India about that income.
Well, thank you, Sanjeev ji. We really appreciate that. So, dosto, if you have a question for Sanjeev Gupta CPA, then you can visit him online at sanjeevcpa.com, or you can call his office. That number is 510-825-7563. His office is located in Fremont, California, and they're open 6 days a week. So if you want to discuss moving money or asset from India to United States or from United States to India, then you should definitely consider speaking with a professional like Sanjeev Gupta. This simple step can help you avoid a lot of pain and penalties. Once again, his office number is 510-825-7563, or you can visit him online at sanjeevcpa.com. That is all we have for today's tax segment, but we will be back next week with more helpful tips. Till then, thank you and goodbye.